Picture this. It's December 10th, 2008. We're high above the bustling streets of Manhattan, sitting in a luxury penthouse. A 70-year-old Wall Street titan sits his two sons down. And there are no tears here. He doesn't break down, and he certainly isn't begging for mercy. Instead, he just looks them dead in the eye and readies himself to make a confession that is literally going to shatter the financial world.
He utters just 6 words. It's all just one big lie. Let that sink in for a second. With that single, hushed sentence, a 4-decade-long mirage just instantly evaporated into thin air.
And, those 6 words didn't just ruin a family. They vaporized $65 billion. $65 billion. That is the sheer scale of the destruction caused by what was quite literally one big lie. We're talking about the absolute greatest deception in financial history.
Okay, so let's dive into this and unpack exactly how this all went down. In this explainer, we're going to walk through this masterclass in deception step by step. We'll start with the illusion of perfection, then go inside the ghost floor, look at the ignored whistleblower, examine the inevitable collapse, and finally reflect on the legacy of ruin.
Right, so part 1, the illusion of perfection, how the trap was set. For 40 years, Bernard Madoff wasn't just, another trader. He was the absolute bedrock of Wall Street. He was the former chairman of the NASDAQ, for crying out loud. And while the rest of the market was dealing with tech bubbles bursting and sudden crashes, his investment fund delivered what seemed like an impossible miracle, 10 to 12% returns year after year, exactly like clockwork. But here's the thing. The real genius of his trap wasn't just the numbers. It was actually his method. He never advertised. He never solicited for funds. In fact, he famously turned people away. This artificial exclusivity became his absolute deadliest weapon. By playing hard to get, he completely bypassed people's natural skepticism. I mean, you had the wealthy elite, prestigious country club members, and major global banks literally begging him to take their fortunes. He weaponized human desire and prestige to lure in the supposedly smartest people in the world. Okay, part 2. Inside the ghost floor. The secret at 885 3rd Avenue. So tucked away at 885 3rd Avenue, which is Manhattan's famous lipstick building, was the stark, unbelievable contrast. Up on the 19th floor, Madoff ran a completely legitimate, modern, high-tech market-making business. But just 2 floors down, on the super quiet 17th floor, was his secret advisory unit. No Bloomberg terminals, no live feeds, just this gritty operation using obsolete 1980s IBM computers running continuous batch runs to print millions of fake paper trade confirmations. The actual mechanics of the greatest financial fraud in history were shockingly simple. It was essentially a crude magic trick, played out in 3 simple steps. See, Bernie Madoff wasn't actually buying stocks. He wasn't brilliantly hedging options like he claimed. Step 1, he simply took investor funds and deposited them directly into a Chase bank account. That's it. Step 2, his crew printed out those fake paper confirmations so the investors thought their money was hard at work. And step 3, whenever an older investor wanted to withdraw money, Madoff just paid them using the cash deposited by the new investors. It's the absolute classic textbook Ponzi scheme, just scaled up to billions of dollars. Moving on to part 3, the ignored whistleblower, warnings that fell on deaf ears. Now, a scam this massive is going to leave a mathematical footprint, right? Enter quantitative analyst Harry Markopolos. He looked at Madoff's supposed split-strike conversion strategy, which basically involved buying a basket of stocks and hedging them with options, and he realized it was mathematically impossible. There simply weren't enough option contracts traded in the entire world to support Madoff's claimed positions. It only took Markopolos 4 hours of calculations back in 1999 to unravel a 40-year deception. He literally titled his dossier, "The World's Largest Hedge Fund is a Fraud." And Markopolos didn't just quietly whisper his findings either. After proving the math was impossible in 1999, he submitted his first detailed dossier to the Securities and Exchange Commission in 2000. He did it again in 2001, and then again with even more detail in 2005. He was practically shouting from the rooftops to the very regulators who were designed to protect the public. Which leads us to a seriously baffling, deeply frustrating question. Why did the SEC investigate Madoff multiple times over these years and walk away every single time without checking if a single trade had actually cleared? All they had to do was ask for the basic receipts, but they never did. The system completely, utterly failed. Part 4. The inevitable collapse. The math catches up.
So, the illusion held incredibly well right up until the autumn of 2008. As the global financial crisis struck, terrified investors rushed to Madoff demanding to pull out their cash. We're talking redemption requests hitting a staggering $7 billion all at once. But as we know, there was no giant pool of capital. Madoff had only a few $100 million left in that Chase Bank account. The money was just gone.
The very next day after his confession to his sons, on December 11th, 2008, federal agents arrived to arrest Bernie Madoff. The entire paper empire dissolved overnight, and man, the impact was instantaneous. Which brings us to our final chapter, Part 5, The Legacy of Ruin, the aftermath of the illusion. Look, this wasn't just some white-collar crime where a few banks lost some numbers on a spreadsheet. The real-world devastation here was absolute. We are talking about a global wipeout. Entire life savings were erased. Decades-old charities were forced to shut their doors forever, and countless pension funds were totally decimated. For orchestrating this unimaginable amount of pain, Madoff was sentenced to 150 years in federal prison. He ended up dying behind bars in 2021. But, the Madoff scam leaves us with this super sobering, enduring lesson in human psychology. When an investment looks too good to be true, are you letting authority and prestige blind you to obvious deception? Bernie Madoff proved that a fancy title and an air of exclusivity can completely short-circuit the critical thinking of even the sharpest minds on Earth. It's a really powerful reminder. Always check the math, and never let the illusion of perfection stop you from asking the hard questions.